Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. Trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, hi, Jim. Another Friday in absolutely incredible financial markets.
Bob, we start off the show with a couple of questions from our listener, Kate. Kate's first question: I have a gold bug question for Bob. I understand that the chart on the GDX is looking constructive and some accumulation of gold miners seems in order. However, if the equity markets break their March 23rd lows, then can we expect a possible resumption in the downside in the gold miners due to overall liquidity issues and associated margin calls?
Oh, unfortunately, yeah. It's shifting from in the great financial bubble. Typically, gold shares really underperform the market because gold's real price goes down, and then in the post-bubble contraction, which we could be in, then the real price goes up, and then eventually the gold stocks go up, and they begin to outperform the New York Stock Exchange, for example, the Dow or the S&P. But it's still rocky weather until you get the turn in. And so, again, we're going to rely on our technical tools to give us the opportunity. And then there was the other part of the question.
Kate also asked, silver recently traded for a day or so under $12. If that level is broken, could support be as low as $10?
Yeah, it could go that far. And it was just in, I guess, early December, that a few of the silver bugs got cranked up, and they were saying that 87 on the gold-silver ratio was ridiculous, and it was suggesting that silver was really underperforming gold, and it was time to buy it. And of course, then in a contraction, silver will always fall relative to gold, and the gold-silver ratio went up to 130, I think. We'd thought a wild guess it could go to 115, and that was just a wild guess. So it's within the long-term pattern of the way silver behaves relative to gold. In good times, silver will outperform gold, and in not-so-good times, credit contraction, that sort of stuff, then silver underperforms, and it really has. So for the silver bugs, it's difficult, but it's a fact of life. And this is why we prefer the actual gold sector over the silver stocks. But when the time comes for both of them to rally, both sets of stocks, silver and gold stocks, will rally.
We'll have more with Bob Hoye right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. surrounded by world-class gold deposits and mines. Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Bob Hoye. Bob, Americans apparently are hoarding cash just like they did before the suspected computer crashes of Y2K.
Yeah, we saw that one, and there's two elements to that, I guess. That one, in a post-bubble contraction, everything's going down. It's, the everything bubble is followed by the everything contraction. And just ordinary money picks up purchasing power. So, and people just turn to it. So this plagued policymakers in the 1930s, where with Roosevelt's New Deal, they just hated those who hoarded their cash. And if you were a retail merchant store, you had to have in your window that you had joined some, I can't remember, some or a quasi-government organization, and you're condemning those who held cash. But this one part due to a contraction, and cash just becomes appealing, and then the other due to a panic about the coronavirus, and that one was a panic due to an imaginary problem of Y2K. Gosh, I'd almost forgotten all about that one, but the folks sure got hysterical about that one. So, anyways.
China is boasting that its economy is now booming again. Is it really?
I don't think so. They had a bigger shutdown, but you've always had that problem of normal growth was 18 to 20%, and hard times was a growth rate of 7 or 8% on GDP. But how valid is the calculation of the GDP? Who knows? But actually, when you think about this panic recently in both the financial markets and in the the health threat, we looked up SARS, and it was. It looks like the numbers were about the same as with the coronavirus, But I remember some financial institutions in Toronto that were subscribers of ours got very concerned and were telling people to stay home from their offices and stuff like that. But it didn't become a panic. The market had already, you had the fabulous dot-com bubble that blew out in March 2000, and the virus SARS didn't become really written up until November 2002. And that was when the market was really crashing, so you had no drama there. Then also China in the global economy was much smaller influence relative to lately. So whatever would have happened in China didn't matter, but now it does matter, and the main matter, it seems to me, is that the Chinese government, being communist, insists on a perfect society, so then they had to eradicate the virus as fast as possible and did a magnificent shutdown, and that then rippled out everywhere. And then also you have, in any country, the socialists will, of course, use this as an excuse to obtain more money for their projects and more authority, like with the Democrats, Nancy Pelosi, has this idea, when they were negotiating this huge $2 trillion package to bail everything out, she was insisting, so here's a health package to save lives, but she was tacking onto the bill funding for abortion. I mean, it's really absurd. You can have one view on any of those, but to try and put those two together was insane. So anyways, that has gone by, and it's still a massive intrusion, but at least most of it is aimed at trying to get money into the hands of those who suddenly don't have money. But they managed to put $25 million into Kennedy Performing Center. So the political storm is definitely going with the financial storm. And at some point, the stock market side will quieten down. Our work, we've been pleased with it, goes back to early October when Ross, looking at his charts, had a springboard and buy and was looking for a rally out till the turn of the year. And then that's when we drag out all the old history where there have been so many terrific bull markets complete at the turn of the year, like i.e. January. And we listed them, the Nikkei in the last trading day of 89, and then the 1973 bull market was huge, and it reached its best in January. So now we have another one, absolutely without doubt. You have another huge rally into January, and then a failure. And of course, when we were looking for and noting the technical excesses, I think one of them was the January 3rd or January 4th publication, and we listed, is the market up when it should be? Yup. And are there signs of speculation? Yup. We had that. So then the line was that highly likely that the markets would roll over and head down, and then that the media would then come up with a reason for the decline. Of course, in early January, the coronavirus was being talked about but not realized how threatening. So then that turned out to be the label for the decline, and it has been on the economy side, with contracts being canceled and employment soaring. It's been extraordinary, and it's disturbing to see. But our view was that the market would go down anyways, and then it turned into a crash. So we looked back in previous crashes, really bad ones, and they would last from about 2 months. And with as it was getting towards the end of it, a very heavy liquidation, which we had. I think that was focused around March 23rd, and then a rebound, and then you go down and test the lows, which seems to be happening now. So we could have some stability in the financial markets over the next few months. There could be some stock rallies as well, but I think one would have to be a very nimble, let's say a professional trader, to really take advantage of it. But we think that for investors and traders, that the investment action can be in the gold side. So our main task now is to identify the next buying opportunity in the gold stocks. And I always kind of like that sector anyways. And also I like the exploration side in the gold markets, and we're watching for that one.
And Bob, another question has just poured in, and we'll have the answer for our listener right after this.
An exciting question just come in right now.
Yes.
Okay.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration, with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Bob Hoye. Bob, we just received a question from our listener, Josh. It's rather lengthy. Here's the question. With what's going on in the world, many people I know are aware of the flawed monetary system, and corrupt governments are telling me that the Federal Reserve, IMF, and banking elites are planning to nationalize gold after all global currencies collapse due to all the money printing and trillions in debt being created. It sounds like one possibility that may happen is after gold nationalization, the IMF resets the price and uses it to back a United Nations and IMF one world currency. I want to see if Bob has heard of this possibility of well and what he thinks of it. Well, Bob?
Well, there we are, Josh. Hey, you've phrased it well, and there are, let's call it, in the policy-making side, which most people think is all straight up and responsible and everything else, but it is not, especially in central banking, because they have assumed wisdom in a committee that doesn't exist, and that fiddling with this and fiddling with that will prevent bad things from happening. Well, it didn't work this time. We got a bad thing out there. But this, of course, what prompts Josh's question about nationalizing gold. This may not happen. I think we're going into a new world where the political popular uprising, where it's a movement against too much in-your-face and in-your-wallet government. And in the summer of 2016, that popular uprising movement in the States chose Donald Trump as its executive. And so this is moving along, and then it's becoming worldwide. Now, the big government side is using this coronavirus as an excuse to extend authority, but the struggle is between those who want to reform government and those who want to extend the authority of government. And part of this will be what people will choose to have for money. And the whole point is that currencies have already been nationalized. And with the U.S. dollar, it's a national currency, non-convertible, so there's no discipline on the central bankers. But the public's going to look at things and say, this is a deadly instrument, a central bank without a gold standard. So I think the public will force common sense and practicality on the nonsense of central banking. And I'm just going to finish off central banking with that in the early 1900s, the powers that be, the establishment, knew that a financial crisis would more than likely be followed by a recession. So then the whole pitch behind the Fed was that as a lender of last resort, it would prevent financial setbacks, and in preventing those, that would prevent recessions. Great theory. It's very attractive, very appealing, but since 1913, when the Fed was chartered, there has been 18 recessions. So the theory is just plain wrong, and ordinary people can figure it out. So I'm quite optimistic. The reform of big and intrusive government will continue. It will be difficult. And also with that, eventually the public will demand a sound currency, and you're going to end up with central banks on gold standard. And the establishment will rant and rave about it, but no, I think the will of the public is only just started to assert itself.
According to the Canadian Bankers Association, 500,000 Canadians have now applied to defer their mortgages. What does that tell us about the state of the current economy?
Oh, Jim, this is so concerning. You can call for a bear market, but you can also understand that that puts a lot of hardship in. In the case of mortgages and people suddenly without a job and unable to service their mortgage, but I think that the whole of the mortgage system with some backup, the Canadian Mortgage and Housing, and you get all kinds of agencies in here, that much will be done to help these people out. And you're getting to the point of how many deaths will occur if you go into a full, hard depression in the economy. And so it's now a fine edge between ending a disease threat before you kill the economy. And that, how it's done, but maybe over the next 2 or 3 months, we can get off of the disease threat and then allow the business sector to get its vitality back. But I don't usually agree with government bailouts, but when you're looking at people and with this kind of a suddenness, yes, some help is necessary and some help will be useful. So very difficult times, and I've read a lot of financial history, and this one really is severe.
Bob, thank you so much for being on the show.
Yep, Jim. Hopefully we might have cheerier news next week. Somewhere, somehow. Yeah.
If you have any questions for Bob, you can send them to info@howstreet.com, our YouTube channel, Talk Digital Network. We're on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.